Free to interrupt me. I have no problems with that. And let's get started here. So let me just get this recording. Alright guys, so feel free, as always, this is, open to whatever you guys want to talk about, and, from there we'll work our way into whatever topics you want to discuss. So who's got some questions for me? Okay, sure. Who's this? Is this Will? Hey, Will. Okay, so Euro Pound daily pin bar. Okay, so let me get my bar charts on here. Okay, so the pair is the Euro Pound, and we're looking at this bar here, this daily pin bar here. So I had a few questions about this on the forum too, and I'll talk to you guys about why I didn't personally take this one, and we'll talk about some of the pluses and what we have going against us too. So first thing I always do when I'm looking at the daily charts is the bar itself a pin bar. So this is pretty quickly it's pretty easy to tell this is a pin bar. We have the open and close are within the prior bar. We have a nice long nose sticking out here. So that's the first thing on, like, let's say a checklist you have. Is it actually a pin bar? And obviously it is here. But then the next thing I always notice is the location. And if you see this pin bar is stuck right in this traffic here, this sideways market here. So what you basically have happening is you're getting prices getting trapped within this area here. So when I see that, immediately I think traffic. And when I say the term traffic, it means more than just the bar is next to other bars. What traffic means is that if price does break, let's say, you're going to go long here, you're going to have to worry about these areas all over here, because that's going to create resistance for your trade. So when I see that, I automatically don't take a trade like this. If you're going to take a trade like this, well, we have these 2 bar highs up here, and we have another little bar high up here. So you're trading right into this area right here. So that's going to give your trade potentially trouble. Now, depending on how you trade, some people might say, okay, when we get to where we are right now, I'm going to move my stop up. Maybe you move it to break even, which really doesn't give it much space to run, or maybe you move your stop to under that daily bar, and you're going to hope that this takes off, and you go with the trend and everything. But for me, since I'm trading multiple time frames, I'm trading everything from the weekly to the hourly, an opportunity like this to me isn't all that appealing, because I know we're trading right into this area here. So just because of that, for me, it's a no trade. It is off a great level here. We're off this big round number of the 9,000 mark, which is extremely, these, as I talked about in my previous webinar, that I see a lot of faces from last time. Those are really important areas here, but I wouldn't be surprised to see price consolidate around this round number too. So for me, I would just wait this one out. But I could see how some of you would take it, but I would just be cautious, because we're at the point right now where would it surprise us if price came up to this level and then bounced down again. So depending on how you exit your trades or manage your trades, it would be some of you might take this and some of you might not. And of course, guys, if you want to type on the chat too, if you have a question, you don't want to speak, as that's fine. I got one eye on both things. Okay, hey Bob. So Bob wants to look at the Euro New Zealand. Now this is not a pair I've ever traded personally, so this is the first I'm seeing this. Alright, so Bob wants to talk about the Euro New Zealand daily pin. So here's our pin bar here. And from the initial looks of it, this one is a better one than the Euro Pound for me personally. The open and close are within the prior bar, it looks like. Let me just make sure here. Okay, the close 244. Okay, so it's barely closed within that other bar here. Now let's go over what we would say are the good things about this trade and the not so good things. So I'm just going to zoom out here because I've really never looked at this pair just to get an idea. All right, so firstly, we're in this huge uptrend here. So, price really hasn't looked back much. Though, you can see clearly we're at these bar highs here. So we're at all this resistance here. So that's always a good first sign here. But again, we're running into a little bit of problem here where we're trading within these traffic areas. So price, if you look here, let me just draw a horizontal. You can see we have this pivot area right here. So we also have where the high of the pin bar bounced off of. So we have all these bar highs. But we also have all these bar highs and all these bar lows here. So this is, again, even though you have a little bit of space created within here, the fact that the market's been so sideways within these areas here are going to hold your trades up. They're going to cause problems for your trade. So for me alone, this trade, I wouldn't be able to take a trade just like this by itself because I don't have a lot of conviction that price is going to easily be able to move out of this area. So if you trade more like James, where you're going to move your stops at these first important areas, you would have to have your stop to break even when you hit this point. You couldn't hold on to this trade and just hope that it breaks through unless you really believe that we hit a top here. Now, I don't know if we have divergence or anything on this trade. I could pull that up. Let me just stick a MACD on here for you guys, because that might give you a little more confidence whether or not you want to take this trade. Okay, so we do have some divergence here. So you can see our oscillator is just barely making a high here, and we're bouncing off that. So that would be a stronger sign, a reason to take this trade for those of you that look at divergence. But again, it depends on how you're going to manage your trades here. We know why price stalled where it did. Now the question is, what is your conviction of this trade? Do you believe that price is going to retrace more from just this pin bar here, and you're going to hold and hope it breaks through this area, or are you going to move your stop to break even, take some profit, maybe you're fully out of the trade or whatnot? So for me, I wouldn't personally trade this off the daily. I would instead rather look for something like this, where now we have this obvious area of resistance here, and then if price can break above that resistance, then pull back to it, then you have supporting price action at this area here. So for me, those are more of the trades I look for, unless this bar has a lot of space created. And it created just a little bit of space in this area here. So again, depending on how you manage it, you might have pulled some profit out. You might still be in this trade, and hope it goes in your favor. I would be pretty skeptical at this point. This is a pretty clear price pivot zone area. You guys can see, I mean, literally how well respected this line here was, and I'm sure that coincides with a round number. Yeah, 2.4, you can see, is right in that area. So again, depending how you trade it, you might have taken profit, you might take a loss on this one, but if you're going to trade bars like this, and there's certainly nothing wrong with it, I trail my stops, as most of you know, so I look for the bars that have more potential. But if you're going to trade a bar like this, I would say that there's no other way but to get your stop to break even at this point, or at least get some profit off the table and really reduce your risk or something like that. So Will said, yeah, he moved the stop. Oh, I didn't move my stop to break even when I should have. Okay, but it's lesson learned. The more important thing is that if you didn't move your stop to break even, and let's say you really believed in this trade, did you though see this area of support and resistance, this price pivot zone area? That's the most important thing, is that you're able to identify these areas, because then you at least know what you're looking for here. I would rather see, let's say, price break down now and then pull back, and then you get some price action here to go short, and then you're playing it off this price pivot zone area. Instead, when instead of trading into this area, use these areas to trade off of, to trade away from, because those are what are going to support your trade. So here we got this so-so looking pin bar in traffic off this price pivot zone, but you have all this support under here that's going to more support this bar than it is going to support this bar, if that makes any sense. So, depends on how you manage this trade. I'm not sure. Bob, are you still in this trade? Okay, Bob said he did. He set his take profit for 2.4, but his broker didn't close the trade, and now he's in drawdown. All right, I just want to say something about that. Did you make sure when you put your take pro? Oh well, it should have taken. What's the low on this one? Okay, so you see how price only went to 39.77. I don't know what the spread is on this pair, but if you put your take profit at 2.4 and you're going short, you have to make sure that you put it where the bid and the ask is going to hit, not at 2.4, but wherever the spread is. You have to take that into account. Otherwise, your price might make it down to 2.4, but that doesn't mean it's going to close at 2.4. It's actually going to close at the ask price. So if the spread on this one is, right now it looks like it's 14, and price makes it only to 2.4, that really means that it's going to only make it to 2.40014 or 2.4014, because you have to add the spread in. So be real careful about that, especially on these bigger spread pairs, because you have to remember the ask price is way above this bid price here. So even though you're on your chart you see 4463, if you go long right now, you have to add in that spread to this part here. So you're really going long at 44, whatever it is, 76, 77, whatever the spread is. So just be aware of that when you're setting your take profits and your stop losses and whatnot. Yeah, believe me, been there, done that. And as long as when you guys make these mistakes, and that's a mistake on your part, because you have to be aware of that. But if you don't know, that functionality of the market, that's part of the process of learning, to trade. So, but next time you go to set your take profit, you're going to always remember, because of this trade, that you got to make sure you take into account the bid and the ask price. So the question is, now you had your take profit at 2.4, so, and it didn't take it, so now did you just close your trade, or are you hoping that it comes back? What's that? What did you say? Where's your stop? Okay, you still have your stop up here. Well, personally, I would take this as maybe a lesson learned. Maybe put your stop down here or something. This isn't, trade advice, but the fact is you had your take profit. You identified the area. You had it all marked out, and you just made one, let's say mathematical error without taking into account the ask price. I wouldn't really hold on to this trade and just hope it works out. I would probably, I still make errors. I've punched in the wrong lot size, and when I do something like that, I close immediately. I don't hope for, let's say you go to put in whatever 5 lots or whatever you're trading, and you put in double what you thought. I don't hope and wait for the spread to get covered and get out. I always take that loss and just move on. So, unless you're aware of your risk, you have your stop up here, but. I think the important thing, though, is you clearly identified this area, and that's going to help your trading immensely. You were in that one too? Oh, okay, Jerry, good. Glad you got in. All right, man. What's up? What do you want me to look at? Okay, so the pound Canadian. Okay, so I'm assuming this is the pin we're talking about. Okay. Okay, so Jerry's saying he targeted the 1.8 round number, so let me get that up there for you guys. And I know Jerry's becoming a fan of these round numbers too. Okay, so let's look at this one. All right, so this one is, of all 3 we've looked at so far, or the other 2, this would be considered, in my opinion, from how I play them, the most playable of the 3. with that said, I still wouldn't have taken this trade. So that just shows you how picky I am with these daily trades. Now let's look though. We have more space created in here. So there's a little more space than usual. But the most important factor why this trade would be the best one of all three for me is this reason. So this time we're trading away from this price pivot zone here. So all these bar lows here, then we have this flip here, and then our pin's right off that level. So I can see why that, why this trade is appealing. And then what Jerry did is he targeted the big round number of 1.8, which you can see again, that line, that 1.8, look what's happening again at that area. We have this flip of prices turning over. So we know that we're going to see a reaction at this area. Most of the time we will. And as you can see right now, prices at that area, we're having a little bit of a bounce here. So this is, to me, even though this isn't a trade I would have personally taken, and I could see why somebody would take this, and just because I wouldn't take it doesn't mean it's an invalid trade. Not far from it. It just means, everybody starts to develop their own criteria and what they look for and just what they're comfortable with. So you could draw a million things. I'm sure a bunch of fibs line up on here. I could throw a fib up on here. I'm sure we're bouncing off something. You could see we're off the 38.2. You might even draw another one here, see if we have any confluence. We do. So this is a high probability trade, even though I didn't take it. You can see we have the 61.8%, the 38.2. You have your price pivot zone in here. So all signs are pointing that we're going to go south here. And then the next thing to do is exactly what Jerry did and identify where are we going to stall out. Where am I looking to get out of my trade or minimize my risk, or whatever you want to do that you're comfortable with managing your trades. And look exactly what price did, and that's a great trade, and it's a very well thought out trade. So congrats to you on that one. Those are some good pips for you. And it feels good when you, it feels good when you can see. I mean, it seems so simple, especially when you're looking back on it, but these areas they're gonna all jump out at you clear as day eventually, where the same way you can identify a pin bar, you're going to be able to identify these areas of support and resistance, and then it just becomes a matter of putting the pieces together and how you're comfortable. So where I wouldn't be comfortable taking this pin bar, not because I can't see why it won't work, just because of my style of trading. It still shows you that you could trade a bunch of different ways with price action, but as long as you get these key concepts down of the price bars themselves, support and resistance, that's it. The rest is just practice and putting it all together. So that was a nice trade, Jerry. Enjoy those pips. Okay, so alright, so I just have to remind you guys, I have to repeat what you say so I can get it up on the video because I have an earpiece on. So what Jerry said he did was he took half profit off the table, and then he moved his stop down. You said you moved it to, where'd you move your stop? Behind. Okay, so he moved it with the spread above the 15 points behind this area here, and what he's looking for now is to make it to this area here, and I assume that's what you meant when you said the 1.77 round number. So if we go, let me just get that on there for you, so we can see again you can see this is a more of a minor price pivot zone, but again you could see the reaction in this area here where there's that flip in support and resistance. So Jerry's covered himself. He's got no more risk on the table. He's already rewarded himself, and that's what he's comfortable doing. And now he's looking for a price to see if it can make it on its way down there. And if not, he's still going to come out with profit on his other half too. So that's a well thought out trade. I can't say anything's wrong with it. So that's. Yeah, I mean everything. That's a good trade. I can't see anything. Just because I wouldn't take it because this pair's been a little choppy, and I would have liked to see this bar sit higher up, meaning the high of this nose didn't really protrude away enough from this, just for my style of trading. But you could look at this as a breakout trade, a breakout and a pullback, and then a continuation downward. So, I mean, I can't really say you did anything wrong because you didn't. So, if you could do that every time, you're going to have no problem with this material. Okay, so let me just catch up on the chat here. So Adriana said, how do you see the pound USD daily and weekly? So let's hop over to that. So if some of you have been watching the charts the last few hours, we had quite a move down. Somebody had made a post in the one of my sections asking me what I thought about today's price action, how a lot of these bars today closed like this, where they closed at the extreme low of the bar. Well, the pound USD I found interesting because we're sitting on this support here. So actually, if I stick in the line that I had watching, it's the 1.45. So again, you could see that this line here, this 1.45, was our support level. And then we had this, just a bearish bar. It wasn't an outside bar or anything like that, but it was sitting real heavy right on this area here. So just from experience, from what I've seen personally, is when you get, price sitting heavily on support in a big bearish bar like that, usually what happens is you're going to get a pretty big move down. But also, the pound USD is heavily oversold. So if I bring up the MACD right now, you can see we have this divergence forming. And this is some pretty heavy divergence. It's also on the pound yen. So I wouldn't be surprised personally, and again, this is just a little bit of forecasting, but I don't trade off of these thoughts. You still got to wait for the price action. We might get a pretty big down day and then a reversal, and maybe we'll get a pin bar tomorrow off this area here, which would be really good, and that would be something that's very tradable for me. So the daily, I don't see anything to do right now. You could look for a breakdown, a pullback, and a continuation. So you might look for price action at this former support level. But again, price is very oversold, so you got to be cautious with that. But again, we're just using support and resistance. And let me just throw up the weekly here. Yeah, again on the weekly here, we're in a little bit of consolidation mode here, but there's no real, maybe some of you got in on this pin bar here, which was in a lot of traffic, and you squeaked out a little profit in this area, these lows. But other than that, I wouldn't, personally, I wouldn't be, putting on a trade right now. But definitely an interesting pair to watch, especially with the oversold conditions. And we got the new president coming into office tomorrow. And I was telling Philip before that if you pull up your charts and you mark down between the election time and the inauguration date of the last presidents. So you got Bill Clinton was 8 years, and you had Bush 8 years. You could actually see how it's interesting, and I'll let you guys do it yourself. But you can almost see these reversals that happen every time we get a new president to office. No matter what your views are on anything, it's pretty interesting just to throw that up on your charts. And Philip got quite a laugh out of it because it's almost uncanny. But I'll let you guys do that one. All right, so let me see Spark. So I know, Spark, this is your first one in here, so, welcome. I'm glad you're asking questions. Can we look at the weekly Euro-Yen? Yes, of course we can. All right, so let me bring up the weekly Euro-Yen here. The bar prior to the current is a pin, correct? Yes, that is correct. This bar here is what Spark is talking about. That is a pin bar. The overall bar itself is a great-looking pin bar, but as I was showing you guys before on the first few pins, we're in heavy traffic here. So look how sideways price is. There was no, again, what I call space created. I can't even draw an arrow in there because it's so small. There was no space in this area here. So price is in a heavy sideways market, which tends to make these pins less. For me, they make them. I don't play pins that are in that much traffic like that. So. Yeah, for me, this would be a no trade. Some of you might have got caught here, and you might be in this trade long right now, and it's not looking great for you. Hopefully, if these lows will help you up, but this one looks like it just broke the highs here and then shot right down. So, again, that's one of the things you have to be aware of with trading in traffic like that. You can see what happened here is price came up to this little pivot zone area, and I know this seems a little digging into it too much, but it's really not. So you can see we have this bar low here, then we have like this high here and this one here, and it bounced right off this little mini, minor price pivot zone that we have right in this area. So maybe some of you put your buy above that area, which would have served you real well. But again, for me, this would be no trade here. What else are you guys looking at or trades you're in? Hey, what's up? Okay, so wait, who was this again? Sorry, I couldn't hear your name. Oh, okay. So, all right. So I'm glad you got in this time. All right. So you want to look at the Euro USD pin, right? Euro yen. Yeah, that was the Euro yen. Yeah. Well. Yeah. So again, here on the Euro USD, we have, like you said, very similar look to the Euro yen I just had up. And again, this is a pin bar. This one is more playable than the last one because there's not as much traffic. But again, if you have your buy above the high of this pin bar, it wouldn't have been triggered. Price broke down, it invalidated the pin, so you would cancel your order. But this one, if you were to play, if I had to play one of the two, the last one or this one, I would definitely play this one because you could see there's more space in this area and this area, so that if price did go and break high, at least we would be looking to maybe this area for a price to bounce. What was that? Uh, I'm sorry, I couldn't hear what you said. My phone's a little blurry. What'd you say? Right, right. Generally, that's what happens is, the euro should go up. But again, I don't trade on fundamentals at all. As much as, sometimes I think about some of the stuff. But some of you may have thought, okay, we got this pin, new president coming to office, here we go. But, again, if you just stick to the basics of what we, just reading the chart here, I firstly wouldn't have traded this pin to start. But if you did, and you put your buy above here, it should have never triggered, and right now you would cancel your order. So again, this one has a little bit better look than the euro yen. I still would not have had an order on this. You may have, but again, it should have, unless you took it on the retracement here, and then this was going to be a loss for you, unless maybe you're barely hanging on with your stop below the 1.3 number. So for me right now, though, I'm watching this area, the 1.3 area, because if we zoom out here, we can see this 1.3 is clearly, we have a price pivot zone reacting around this area. So it's still an area of interest. And, for those of you who aren't as concerned with traffic, you said, okay, we have this pin off 1.3, this is a good trade here, and I can understand that too. I have no problems with that, but hopefully you had your buy above here and it didn't trigger here. Okay, so Bob wants to check out the Swiss yen pin. All right, so let me pull that up. And again, I'm assuming, okay, yeah, the weekly pin. So again, let's look at here what happened. We have a pin bar. So yes, technically this is a pin bar. The bar itself is a pin, but you always have to say to yourself, what's going on around the bar. Where's the location of this bar? And this is like the euro yen here. Look at all this to the left of price. How much traffic this pin bar is in. This is not at a swing low where we want to see a bullish pin bar. So if this bar was located here at a swing low, that's a better place to take these bars. Instead, it was stuck right in the middle of this sideways traffic here. It looks like it barely triggered probably your buy stop, and now you're basically just hoping that it comes back up on you. And I just think that these are the bars you have to learn to pass on, because they're really iffy to me. I mean, I can see why somebody would take it, I guess, but there's way better bars to get your money in on than this one here. So, yeah, unfortunately, if you did take this and it hit your buy stop, it's not looking too good for you here. Okay, so it didn't trigger for you. Okay, good. Yeah, so I'm not sure. I guess you put your buy just enough where it didn't hit you, which is great. So, that's also why we put our buy stops and give them a little room to breathe above these highs, because sometimes it literally just squeaks above it and shoots down like it did here. But again, you have to decide if this is really a playable pin bar, and I would say, in my opinion, this is one to avoid. It looks good, because the bar itself looks good, but doesn't mean that we should get our money in on it. So now, I just want to quickly, since we're talking about all these traffic pin bars, let's bring up the New Zealand yen, and let's look at the difference between this one and the other ones. So again, look at this pin bar, how it created space away from price, how it's at a swing low point. So this is what we want to look for. I took this one also. I got stopped out at break even here, but notice the difference between a bar like this, or even a bar like this is better, even though that's not a pin bar because it didn't close within the prior bar. And then if you go back to your chart and you look at the weekly pin here, see how much it's cluttered here in price? That's always a sign for me to immediately say I'm not taking that trade. And the only time I don't worry about traffic is when you're looking for a breakout and a pullback, which for those of you that follow that, my breakout method, that's the only time I ignore traffic. But when you're taking these pure price action bars like this, you got to be well aware of what's going on to the left of price. Alright, so Will says, seeing as you wait for the very best setups, do you take bigger position sizes when that setup comes along, more than 2%? No, I'm very I trade, basically I trade 1 to 1.5% per trade. I'm pretty much on 1.5%, and I take basically 0.5% on my intraday trades. Just because I'm conservative to my price action approach doesn't mean I up my risk, because I'm pretty my mentor, for those of you who was Dark Star, he was very into the mathematical side of trading, and he really drilled into my head just how damaging a drawdown is. And the fact is, with trading, you're always going to hit a drawdown period. And when you start trading 2%, to me 2% is too much to be trading for anybody who does not know what they're like, does not know that they're a profitable trader. Because I mean, you hit 4 or 5 stop losses in a row, your account's down 10%, and to get that amount back, you have to make more than what you lost. So I'm pretty, for those of you who've talked to me about it, I'm pretty much set on, if you're new to this, that you should not be trading more than 1% per trade. And that's just because you're gonna see how fast those losses can really pile up. So again, just because you're conservative, I don't really think that warrants a higher position size. I mean, I understand 1 to 2% risk, and that's a good general rule, but again, if you're new to this, I would start even under 1% risk per trade, and then if as your confidence builds up, you can up it a little bit. But definitely, I can't see risking more than 2% per trade. Yeah, go for it. Okay. So you want me to go over that? Okay, so the question was about the Swissy, the 4 hour as a breakout trade. So, okay, for those of you that follow my breakout method, this is exactly what I look for. I didn't get in this trade, but this had all the makings of a good breakout trade. Firstly, I look for the trend, and the trend is up. Yes, if you zoom out, the trend looks down. But what happened here is you have to be aware when the trend has turned. So a good way to see that is look at here. We put in a double bottom, clear double bottom, and then we started making higher lows and higher highs. So here's our low points down here. Then we put in another low here. We put in a higher high here. So basically what I'm looking for is which way is the trend. And right now the trend has started to turn over. I'm not saying that we're going to be in an uptrend, but I'm saying for a breakout trade, that's enough for me to look for longs. Then I look for a breakout pattern. And if you look here, we had this clear resistance points, these two resistance points, and we were consolidating down real tight here. So you might want to draw a wedge like that, or you just have it as a horizontal. So basically what I was looking for, and you know, today we had the MLK Day here in the U.S. and basically a bank holiday. So as price started to retrace to this area, as I'll show you in a bit, it was a little too late in the day for me. It was a no trade day really in the U.S. So I didn't take this trade. But we have our resistance points here, and all I'm looking for is a breakout and a pullback. And at that pullback area, this former resistance, I'm looking for it to turn into support with price action. So if I draw this pattern on the 4 hour, I'm looking for signals on the 4 hour or the 1 hour. So generally I'll drop down a time frame. So what I did then is I looked down on the 1 hour, and then at this pullback area I'm looking for price action. So you could actually see here we got this little mini pin bar off this area, but for me that's not a strong enough signal, especially on a bank holiday, to take a trade. But again, you could see how the concept of support and resistance, and you know, that's it. I mean, that's really all I do for my breakout trades. And you can see we pulled back to this area. New buyers came in. So we had that initial burst out. So probably you had a bunch of buy stops or stop losses located above this area. Price hit those orders, and you got that pretty big fast move up here. So if I zoom in, that's that initial big burst out here. And there are a lot of traders that trade a pure break. Then what happens, though, is you get such a fast move up. You get all these profit takers coming in here, or maybe some sellers, that pushes price back down to this area. But then what I'm looking for is for if fresh buyers come into this area here, and that comes in the form of price action, say a pin bar, or you get a bullish outside bar, that's what I'm looking for. So I'm not worried if this bar is in traffic here. So if this happened, let's say, during the active trading time, and this had a longer nose here, so say this bar had a nose that was only had to be a little bit longer, say something like that. Well, that didn't work out, but basically if this had a little bit of a longer nose here, I put my buy above here, and that's a perfect breakout situation. So I had this one marked off. It did work out, you know, if you did take that trade, but you know, I don't know if some of you got in that one, but that's exactly what I look for. Sure. This on the night, so you had something like this. Okay. No, see, okay, that's a good question. So the question was, would I have taken this same trade short if it broke short? And the answer is, if it broke short, that means price is now moving more sideways than it is continuing a trend. So there would be too much for this not to work out that I wouldn't take it short. So if price broke out here and then retraced, you're basically trading into this big round number, and really you're trading into the uptrend. So that's why I try to take all breakouts with the trend for the most part, because the trend is what's going to help sustain your breakout, and it cuts down on those false breakouts. So since the trend right now is up, in my opinion, from the way I view trends and breakout trades, the breakout long has more. There's going to be more. There's hopefully going to be more buyers coming into the market that will help sustain your trade. Whereas if you trade short, you're trading into what I call a buyer's market or a sideways market, which is either going to make the trade go sideways and not really have a lot of potential to it. So for me, I would be only looking for a breakout long. So I had this type of pattern drawn here. But I mean, it is valid to trade it both ways. It's just how I prefer to take my breakout. So it helps me, focusing on certain pairs and not have 100,000 things on my watch list. And so if I see this and I see price break south here, then I know that I don't have to be looking at this pair anymore for a trade long. And again, I'll just explain another little thing here. There's different types of breakouts. So you have that initial breakout and pullback. So this would be the initial breakout, initial pullback, and the continuation. But now what happens is, on the larger time frame now, you might have, so you could say that this move might be over. You're probably out with your profit, or you have your stop trailed up, or I'm sure you probably took profit on this. I would probably use the bat on this, as some of you know. But now what happens is you have the second part of the breakout. And you could have a move back to this area again, and you might get a pin bar off this area to go long again. So there's more than one opportunity usually within these breakout trades. You have an initial breakout and pullback, then you have the secondary breakout and pullback. So, I'm still going to watch this area here, and as long as this holds, this resistance turn support holds true, if we come back and pull out again, I'm still fine with watching this area here. But now if this price comes back into this channel here, then it's no longer a valid area for me. What other questions you guys have? Okay, so I see what you're saying. So, okay, yeah. Some people ask me this question, so this is a good time to review it. All right, so if you were to draw, say, a pattern, a breakout pattern, you might draw something like this. So you have I guess what you would call descending wedge. So price is squeezing down like this. So I get the question often is, can I play a breakout of this line here short? Now, I'm not saying you can't, but personally this is a rule I have. If the slope of the line is pointing down, you don't want to take shorts off of that. So you're not going to play a breakout and a pullback to this descending trend line. So a rule I have is I only take longs on lines, descending trend lines. So let me just go to a blank area here. Okay, so if this is your trend line sloping down like it is here, I'm only going to take longs off that area. So I'll look for a breakout, a pullback, and a continuation. And for a short, I'm looking for ascending trend lines. So you're looking for a breakout, a pullback, and a continuation. So in this case, you have a descending trend line. So if price breaks this, descending looking trend line, I'm not going to look for a pullback to that trend line. It would have to be sloping upwards like that. So that's a question I get often. I'm not saying you can't or that price won't respect that line, but again, to me that's stretching things a little bit when I want to keep it very basic. So whereas you might look for a pullback outside of this line here, I wouldn't look for one going down this way. Yeah, it definitely looks like it is following this line here, but one of the reasons I don't do that is because usually in a situation like that, you're kind of selling into an oversold market because of the nature of the trend line. So, in my opinion, a pattern like this is, even though we might break south, it's more of a bullish pattern than it is a bearish pattern. And that, again, that's just from some of the ways, some of my experience and how I choose to play breakout. So I just try to stick with a little more simplified line, so to speak. So I'm either looking to play, horizontal, or I'm looking to take longs off, a descending trend line, or like I said, an ascending trend line. I'll look to take shorts off. Exactly. It's like you're playing the wrong momentum. It's like that's how you're gonna catch yourself in. That's like when you'll take the short and then price reverses, and you're like, "Oh, why did price reverse?" It's kind of like you're selling into just such an oversold, you're not really. It's not that momentum that you have when you take a breakout of, of the way I showed. Again, that's just, for me. Yeah. So yeah, I have on my charts watching the 1.45 area. So if price comes back to that area now and wants to bounce, I just moved that. All right, well you guys get it. It's right over here. All right, so if price comes back up now, I would look for shorts, or intraday longs for those of you that follow, my intraday stuff. But this support area, if it could turn now from support into resistance, that's a valid area. But I'm still aware of the fact that we're so oversold here. I don't use the MACD or an oscillator exclusively, but you could clearly see here that it's like price is waiting for some reason to go along here. So I'm always well aware of that. You could be trading into that.
Gangsters, what's up, guys?
Oh, sorry. Yeah, most things are. There's not really. I haven't looked at my. I don't make the a breakout list until later on in the night, like around 1 o'clock in the morning. But as far as from just looking over the dailies, there's really nothing jumping out at me. It's more of like, all right, we're at the 1.3 on the euro. Let's keep an eye on that. Maybe something's gonna pop out intraday here, and those are more of the things that I'm looking for. Yeah, you got it. You got any more questions, guys? Okay, pound yen. So who's this speaking again? Ramson, what's up? Good to have you, my man. All right, what's your question? See if I can help you out. Yeah, yeah, it's. Uh, all right, so the question is, how risky is it? Basically, the pound yen's again, like the pound USD, we're just tightening up here. We're at these all-time lows, and we're just kind of squeezing down, It's like something's going to happen maybe tomorrow, the next few days. So the question was, how risky is it, since we're at these all-time lows, to just try to get along in here? And my answer is that's extremely aggressive as opposed to risky. To me, risky is you have too big of a position size on. But if you understand why you're doing something, like if you really believe that these lows here are going to hold, and you put your stop loss in and you know exactly how much you risk, I'm not going to say it's a risky trade. I think it's overly aggressive, because usually what happens is, all right, you have people who probably went long here or long somewhere in here, and they're saying to themselves, all right, these are all-time lows. I'll stick my stop loss down here somewhere. Let me scrunch this up, zoom in here. So they'll say to themselves, all right, I'm going to stick my stop loss under here or whatnot. And now you have price literally knocking on that door. So you have this bearish outside bar with all this support here. And to me, in a situation like this, before we're going to reverse, we're going to shoot down, because that does a bunch of things. First of all, you knock out all these stop losses. You attract new sellers into the market. So in my opinion, to take a long here would be so risky. See, I said risky too. Would be so aggressive, because usually price tends to fake you out the other way before it's going to go long. And especially if we're going to get a big reversal here, usually you're going to get a big down day first, and then that quick run up, which gives us that pin bar that we're always looking for. So I would be very anti-taking a long in this area. It's just things are pushing on the door right now, and if anything, I think that we're gonna definitely see a move down south here, and like I said, we might reverse up again, but I would definitely expect some more downside before that upside move. Yeah, I mean, it's just we're yeah, we're just knocking on this level right now, but this big down move here, that makes me pretty much think we might see something like this, and then the move up. That's a guess. I don't trade on my guesses, but that's just from experience. The way we're just pushing on this right now, you would just think that we're gonna have to at least go down a little bit more before we see a reversal. Now, if we get a huge move down and then that, like a pin bar, that's a good stuff to me, because you shake out all those weak sellers, and then you got new fresh buyers coming in. That could have a potential for a real nice run, but I don't want to get ahead of myself, but that would be ideal. Yeah, yeah. Basically, I just wouldn't. When the markets get like this, and it gets you get that feeling like something's happening right now. Something's gonna happen. Like I could feel it. You could probably feel it. I know. Me and Philip were talking before, and he knows it. So it's like something's gonna take place, and then that's when we get antsy and we say, all right, we're at these all-time lows. We're at some support here. Let me get I'll get a small stop in here, and this has potential for a real long move, and it's great risk reward. But to me, that's just so aggressive that we might as well just wait for that price action, wait for that pin bar or that bullish outside bar. So wait for that price action to tip us off, and that's when we should put our trades on. When we get overly aggressive and antsy, that's usually when it'll probably come down, hit your stop, and turn around, and then you want to pull your hair out, because I've definitely been there, and it's just a lot easier to wait. You got it. Oh, Bob said someone has a question on the Yugma chat window. All right, let me pull that up. Sorry, I don't keep an eye on that chat. I meant to say I keep an eye on the internet chat, but let me get that. All right, where's the chat here? Oh, okay. Okay, Mac wants to know, how do you define overbought and oversold conditions? Okay, so it's not that there's an exact way to identify it, but using an oscillator, such as the MACD for divergence, like James does, is a good way to get an idea of the conditions we're in. So if you look at this MACD here, you can see where we keep making these these higher low, higher lows here, and price keeps creeping down here. So this divergence, so you got your MACD going one way or your oscillator going one way and price going the other way, that for me is an oversold condition here. So here's an example of price being oversold. Our oscillator is continuing to move higher as price is continuing to move lower, i.e. they're diverging from each other, and that's what I would call an oversold condition. Plus, you can just kind of feel it. We had this huge, the moves have just been enormous, and now price is just squeezing down here, and I really want to say we're going to be moving higher soon, and I'm just waiting for that price action bar to tip us off, and hopefully it's going to be a nice little retrace move here. So did that answer your question, Mac? I don't know if you said something in the chat. Okay, okay, good. Alright guys, I think I'm going to wrap this one up and get this up on the site. It was good to see some of the new faces, and if you guys have questions, like always, please just feel free to email me or anybody else, and get right back to you. Alright guys, thanks for coming, appreciate it.